Exim Bank's Trade Assistance Program provides short-term liquidity and mobilizes support for enhancing trade between India and African nations. India Exim Bank's Advisory Services Program over the last 2 decades have played a quintessential role to strengthen the institutions in the global south. India Exim Bank engaged with Nigerian Exim Bank towards designing and implementing a film financing program. Ghana Exim Bank also commissioned India Exim Bank to provide technical assistance across its various operational areas. We believe that these South-South advisory services are very relevant for the beneficiaries as they seek to evolve economies in the growth cycle. With our 3 offices in the continent, we are committed towards contributing to the India-Africa Growth Partnership. Through such collaborations, we continue to empower together.
India at 75 has emerged as a trusted partner for supporting the development priorities of partner countries. In this economic journey, India is aspiring to achieve the common goal of shared prosperity and transforming the lives of people across India's neighborhood and in nations across Africa, CIS, Latin America and Oceania. The idea comes from the age-old belief in the concept of Vasudhaiva Kutumbakam, a Sanskrit phrase that means the world is one family. This transformation has been made possible by the Indian Development and Economic Assistance Scheme, IDEAS, of the Government of India. IDEAS provides support through lines of credit extended by Exim Bank for sharing India's development experience with partner countries to support economic and infrastructure projects, generate socio-economic benefits, promote bilateral trade and support capacity building and skills transfer. At the same time, there is a confluence of developmental impact in India through expansion in trade and resultant economic growth and employment generation. Today, the portfolio comprises 311 concessional credit lines under IDEAS, amounting to Rs 2.5 lakh crore, spanning 66 countries across the world. IDEAS has been supporting a wide array of development projects, providing access to better health and education, reducing poverty and malnutrition, and mitigating the impact of climate change. Such projects have a positive multiplier effect both for the partner country and the Indian contractors that implement projects. Indian companies are supporting local development, and the experience in lines of credit-funded projects is opening new avenues for Indian contractors, enabling them to implement projects supported by other international and national agencies. Here is an overview of the support extended to select partner countries. The Solu Corridor 132 kV transmission line and substation project in Nepal has made energy accessible to the rural population, supporting economic growth and social development. Power evacuation from the Rupur nuclear power plant to the national grid in Bangladesh is set to support the neighborhood in creating a mutually beneficial regional framework for prosperity. The railway line project supported in Sri Lanka has transformed the island nation, and the high-speed trains have reduced freight costs and air pollution. Mongolia is dependent on imports of petrochemical products despite having own oil fields. India is helping to build the country's first petrochemical refinery to boost the economy. Addu Development project in Maldives is set to transform Addu city into a thriving economic hub and an attractive tourist destination. In Mauritius, the Metro Rail project is transforming the environment and easing traffic congestion. In Kenya, a project has revived a textile company and generated employment. The nimbleness of the industry was seen when the company quickly moved into the production of masks and PPE for combating COVID-19. The Nyabarongo hydropower project in Rwanda is contributing to 13% of the country's installed capacity and providing better livelihood and access to education opportunities. A new water supply system in Malawi from Likubula River to Blantyre is benefiting over 3 lakh people. In West Africa, 4 lines of credit to the ECOWAS Bank for Investment and Development have supported over 50 projects, leading to benefit.
Good morning, ladies and gentlemen. My name is Swati Jangra, and it is my honor to welcome you all for this event. On behalf of India Exim Bank, I extend a very warm welcome to our esteemed speakers, guests, and participants who have graced us with their presence today. We have gathered here today for the prestigious Africa-India Partnership Day, an event that has been organized by India Exim Bank with the support of the African Development Bank Group and the Government of India. The event is started in 2013 and has received significant appreciation. This year, the theme of Africa-India Partnership Day is aligned with the theme of African Development Bank Group's annual meeting and focuses on mobilizing private sector financing for climate and green growth. Today, at this beautiful Sharm el-Sheikh Convention Center, we have among us some very distinguished speakers from the Government of India and African Development Bank Group and industry experts who will dwell and share insights and experiences on the theme. Without taking further time, may I now request Ms. Harsha Bangari, Managing Director, India Exim Bank, Ms. Solomon Kenor, Vice President, Private Sector, Infrastructure and Industrialization, AFDB Group, Ms. Aparna Bhatia, Advisor, Department of Economic Affairs, Ministry of Finance, Government of India, Ms. Meg Knudsen, Executive Director, Nordic and India, AFDB Group, and Ms. Pragya Gupta, Specialist, Resource Mobilization, International Solar Alliance, to come on the dais, please. Thank you. May I now request Ms. Harsha Bangari, Managing Director of India Exim Bank, to give her welcome address.
Good morning, everyone, and a very, very warm welcome to this beautiful city of Sharm el-Sheikh and this new edition of Africa-India Partnership, which is being organized by Exim Bank and the AFDB Group under the auspices of the Government of India. Many of us would be aware that India Exim Banks Association under this umbrella started way back in 2013 at Marrakesh. And we have then successfully followed it at the time of AFDB annual meetings at Kigali, Abidjan, Lusaka, Ahmedabad in India, and Malabo before the onset of the pandemic. I think we took some break during the pandemic times, but we came back last year where we organized Africa-India Partnership Day at Accra, and this year we are having it at Sharm el-Sheikh. This year's theme at Africa-India Partnership Day is aligned with this year's AFDB's annual meeting theme, that is mobilizing private sector financing for climate and green growth, wherein we will discuss and explore areas of cooperation between India and Africa around energy transition. At the outset, I would like to take this opportunity and welcome our distinguished speakers, Ms. Aparna Bhatia, Advisor, Department of Economic Affairs, Ministry of Finance, Government of India, Mr. Solomon Quaynor, Vice President, Private Sector, Infrastructure and Industrialization, AFDB Group, Ms. Mette Natsen, Executive Director, Nordic and India, AFDB, and Ms. Pragya Gupta, a specialist in resource mobilization from International Solar Alliance. We also have panels of industry experts. I would like to extend a warm welcome to them also. Mr. Manish Chaurasia, who is a Managing Director from Tata Cleantech Capital. Ms. Oloranti Doherty, Director, Export Development, Afri-Exim Bank. Ms. Mary Kamari, Group Executive, Corporate Affairs and Investor Relations, Trade and Development Bank. Dialdin Salah Mustafa, Head, Business Development, Sterling and Wilson Renewable Energy. And Mr. Mohan Preet Singh, Executive Director, Premier Energies. Welcome to all of you. Today, India is one of the fastest growing economies in the world, and energy, which is the engine for growth of any economy, is a vital input. India is conscious of this fact and have been making efforts towards making the sustainable path to taking growth while introducing mechanisms which will support clean energy. According to Harvard Business Review, as climate risk rises, businesses of all kinds are going to have to devote more of their budgets for preparing and responding to disasters. Investing in risk management can help offset these costs, but many businesses, particularly small ones, might not have the financial stability or flexibility to do so. While Africa looks towards achieving an annual GDP growth rate of 7% over the next years, it can only be made possible through adequate availability of energy, which would then have a multiplier effect across sectors from industrialization to education and to healthcare. It will hence be appropriate if Africa looks at clean energy transition as an opportunity to leapfrog by adapting it, while the policymakers create a conducive environment to promote green growth. However, the shift to clean energy in Africa will require support of the private sector in addition to the government interventions. When we come to India's renewable and energy story, in India in the recent years, renewable energy has been playing an increasingly significant role in augmentation of the grid power, which provides access to energy and aids reduced consumption of fossil fuels and helps India to pursue its low carbon development path. In fact, India has become the fastest in renewable energy capacity addition amongst major economies of the world, with a vision of 500 gigawatts by 2030. The installed solar energy capacity has increased by more than 24 times in the last 9 years and stands at over 66 gigawatts as of May 23. The installed renewable energy capacity has seen an increase of 128% since 2014. In the context of today's theme at Africa-India Partnership Day, I would like to share few of my thoughts on the subject. Climate and green growth require access to new technology. However, access to mobilizing private sector finance for climate and green growth remains a challenge. Firstly, it's the cost that is involved in financing green growth and the risk associated with it. Most of the commercial bankers will not have the appetite to take the risk involved, given that these are new technologies, and may at times even one would fail to appreciate the technology that goes into mitigating climate change to fund it. Secondly, the changing technologies involved in these spheres create volatility in prices. For example, solar tariffs in India have fallen by more than 88% since 2010, almost in line with Chinese spot module prices, which have fallen by 90%. Such changes make it riskier for banks to take an exposure to this sector. While determining the cost of renewable power is the cost of technology, we need similar technological improvements to improve the bankability of other clean energy technologies such as energy storage systems and smart grid technologies. Support schemes for renewable energies and green technologies such as first loss guarantees, interest rate subsidies, and government-sponsored financing facilities should be continued and expanded wherever feasible to reduce the time needed for low-carbon technologies to become economically viable and cost competitive as against their carbon-intensive counterparts. India Exim Bank recognizes the need for extensive support for such nascent innovation technologies. We are supporting several companies with products that promote environmental sustainability through debt, equity, and technical assistance. For example, the bank is supporting a company which manufactures emission control device that can capture over 80% of particulate matter being emitted from diesel generators. Another example is wherein we have supported a firm engaged in innovative solar cold storage systems that reduce post-harvest waste, including using clean energy. We have also supported a firm which was recognized as a technology pioneer of 2021 by the World Economic Forum for its contribution towards recycling of plastic waste. Second barrier is that climate finance remains straitjacketed with the use of proceeds approach, which focuses only on zero carbon or near zero carbon activities. There is a growing consensus on the need to focus on transition in hard-to-abate sectors such as materials industries, chemicals, and transport, which account for almost 30 to 40% of carbon dioxide emission globally. Decarbonizing these emission-intensive sectors through transition finance would also be important. I am happy to share that recognizing the need for transition finance, the Sovereign Green Bond Framework of Government of India includes transition activities in its scope, such as CNG in public transportation. India Exim Bank is also committed to support transition activities through its various financing programs. Thirdly, in many developing countries, debt is less available and significantly more expensive than in developed country markets. Normal financing costs are up to 7 times higher in emerging and developing economies if we compare it with developed economies like US and Europe, with higher levels in riskier segments. Collaboration for concessional financing would be the key to unlock such energy transition exercises in these countries. Concerted efforts are needed from multilateral development banks, governments, and aid agencies and other development partners to extend assistance for energy transition in developing countries. In this context, I would like to highlight the IDEAS guideline of the Government of India, which provides development assistance to partner countries in a wide array of sectors, including renewable energy. Under the scheme, lines of credit are routed through India Exim Bank to partner countries to meet their developmental priorities. In March 2025, the bank has also issued its first green bond, and during the last year, in fact during the this current calendar year, we have actually raised $1 billion of sustainable bonds. So as Exim Bank, we are also committed to the ESG framework, and we look forward to financing projects which meets this requirement of clean energy and climate change mitigation. To conclude, I would like to thank the Government of India and the African Development Bank Group for supporting us for organizing this event. The objective is to bring India and Africa business closer and help them in partnering with each other. We look forward to collaborating with other development partners for supporting energy transition in Africa. Today we have amongst us a few Indian companies and African financial institutions involved in climate and green growth who will also share their views and experiences. I am sure today's deliberations in this edition of Africa-India Partnership Day 2023 will be fruitful as always. Thank you.
Thank you, Madam, for opening the session with your valuable insights and setting the tone for this year's Africa-India Partnership Day. Mr. Solomon Kenor, Vice President for Private Sector, Infrastructure and Industrialization, African Development Bank Group, is a highly experienced professional with a career spanning over 25 years in the field of development financing. His expertise spans across various sectors, including financial institutions, technology, media, infrastructure, energy, manufacturing, agribusiness, and services. May I have the privilege to invite Mr. Kenor to deliver his keynote address.
Good morning, ladies and gentlemen. You may have noticed something very interesting on the stage. If you haven't, Now, Edie Knudsen is my executive director, representing the Nordic region and also India. And there's one question I know I always have to be ready to answer when we present projects at the board. What are you doing for women in this project? So it's great to see the reverse happening on the stage, but I'm enjoying it. Yeah. I'm also very happy that today is Africa Day. For a change, I don't have to be, like a turnip. I'm dressed, relaxed, and my good friend from IBID demonstrated that to me a few days ago, that it's great to actually wear traditional outfits. And I feel very comfortable, very relaxed, and it's great to also see our guests from India dressed in their traditional outfit. So just welcoming you also to Africa Day. I have a particular passion for what I call the South-South India-Africa axis. It's something that I've been pursuing for multiple years. So the context of this meeting, and when I say I've been pursuing this for multiple years, even in my past institutions and my past work, I've seen a lot of synergies between India and Africa and continue to believe that we should really harness these synergies. But allow me to first thank the India Exim Bank for organizing this important Africa-India Partnership Day 2023 to not only discuss how to mobilize private sector financing for climate and green growth, which is the theme of the annual meetings here this week, but to also discuss how India and Africa can further deepen their collaboration. So this session comes at the right time, as African countries are gradually recovering from the devastating impacts of the pandemic. As highlighted in the African Development Bank's African Economic Outlook 2023, African economies have demonstrated some resiliency. We expect growth, this year and next to be 4.1%, above the global growth of 3.4%. But all the same, it's really from a lower base, and we have to continue to, see how we can increase that growth, rapidly. So the growth remains fragile and threatened by many factors, one of which is climate change. Increasing temperature and sea levels, changing precipitation patterns, and more extreme weather are threatening human health and safety, food and water security, and socioeconomic development in various parts of Africa. So, for example, the continent has witnessed several climate change-related catastrophes recently, including a drought in Somalia, flooding in Nigeria, and a cyclone in Malawi, which unfortunately confirmed scientists' grim climate projections about Africa's future. The 2023 cyclone, for example, led to more than 200 deaths, over 400,000 displaced people and damages, and damages and losses valued at almost $250 million. Growth and development cannot be achieved, let alone sustained in such context. It's therefore important that we strengthen existing partnerships and build new ones to pool our capacities together to address these issues. Already, to achieve the Sustainable Development Goals, the continent needs approximately $1.3 trillion per year up until 2030. These needs have now been exacerbated by the urgency to address Africa's vulnerability to climate change. It's estimated that $2.7 trillion are needed by 2030 to implement the continent's climate action ambitions as expressed in the nationally determined contributions submitted in April 2023. But the reality is that African governments have been known to be the biggest investors in infrastructure in Africa because private sector is not really doing as much, but there are reasons for that. Between 2019 and 2020, governments invested about $70 billion in infrastructure projects, while the private sector only contributed about $30 billion. We're seeing the same trend in terms of climate finance flows, where last year, $30 billion was invested in climate-related projects, of which private sector only contributed 14%, which is about $4.2 billion. So as we take a look at really the theme of this year's annual meetings, we have to realize that yes, we're at a low base. Yes, the gap is huge at $210 billion, but we should try our best not to look at the glass as half full, but rather, not rather half empty, but really half full, even though the numbers are smaller. So $4 billion is the baseline. We have to think through, how do we double this? How do we triple this as we go year to year? And I think one of the things that we can really learn from India, based on the theme that we're discussing today, is how we can leverage PPPs with speed to actually scale up the amount of climate change related projects that we do, especially green infrastructure across Africa. Because PPPs are not the panacea to all. I don't know how many of you have worked with PPPs here? How many? Okay. And I think you would agree that these are complex contracts that take a while to develop, and if they are related to greenfield projects, it takes even a longer time to develop because you're looking at trying to allocate the risk to the party that can best manage that risk. So if we want to actually achieve, because the climate disasters are happening, time is not on our side. So if we want to achieve this really with speed and scale, I think one of the great partnerships we could have is really in public-private partnerships design, structuring, and innovation. India has done this very well, and this is an area in which we believe we can learn. And then when we take a look at that space, and I think this is where we have to be pragmatic, let's look at really partnerships that we can stimulate that begin to actually help us address the climate resiliency issues. So Power Grid of India, the partnership with our sister organization Africa 50 to actually work on transmission PPPs is great. Because what we have to understand is that we have a fragmented continent of 54 countries, but when we begin to think about clean energy solutions, we need to think about it from a regional perspective, which means power pools, and hence interconnectors and transmission lines, because Chad can produce, I mean, if their energy needs in Chad is only, let's say for discussion, 100 megawatts, but they have the ability to generate with scale solar from compressed solar, projects of 250 megawatts, they should. But then they should have really the transmission infrastructure to be able to send it to really, the points of demand. So we have to start to think regional. So a partnership that we want to harness is, for example, the partnership with Power Grid and Africa 50. But we want to really look at more of those because we really have a diverse and large continent. So that's an example of an area we would like to look at. Now, when people think about climate change, sometimes they focus really on mostly energy. We all have that natural tendency. But in Africa, and as Martin Fergene, who I see sitting there, will confirm, our greatest source of greenhouse gases is really coming from our depleted lands, okay? And so we have to also look at this from an agricultural perspective. Water resources are very scarce in some of our great, agricultural areas. Jane of India is very experienced at drip irrigation. We want to see more drip irrigation actually implemented in Africa, potentially through public-private partnerships or otherwise. But, these are some of the examples, in which we can actually harness the India-Africa axis, especially through private partnerships, to begin to actually, address the climate change issues with speed and with scale. I see Abdul Mukhtar there. ICT is another area. India has significant ICT experience and expertise, and it would be great. And we have a very dynamic youth group who are innovating, in the whole fintech, agtech, edtech, multiple spaces. If we can actually create those partnerships, and what I like, about the Fourth Industrial Revolution is we can actually harness ICT for solutions to our own peculiar problems. So we are not necessarily exporting what has been successful in America or in Europe and simply trying to just export and do it the way it's been done. We're actually looking for customized solutions. M-Pesa, is a customized solution from Africa. I think we're exporting it now, hopefully to India and other places as well. So sometimes, this synergy can also be on the reverse basis. I want to conclude with an area that's not related to green infrastructure or clean technology, but as the CEO of India Exim knows, this is a particular area of passion for me, the pharmaceutical sector. So this is in direct alignment with the bank's industrialization agenda and the need to ensure that African pharmaceutical companies have access to the right technology to produce local and ensure minimum security of supply in medicines and vaccines. We cannot afford some of the negative lessons from the COVID experience to repeat themselves. And we have to really, yes, we're very thankful that COVID is mostly over, but we have to prepare ourselves for the next pandemic or the next epidemic. So through our own diverse finance project, products, we are hoping to really invest about $100 million a year in direct, regional and local production of, pharmaceutical drugs. And I'm talking about pharmaceutical drugs really peculiar, to our disease profile. And in addition, we also realize that, we're a continent. We have the African Continental Free Trade Area, so we have to pay attention to the infrastructure to transport these pharmaceutical products from country to country, because the idea is not to localize production in all 54 countries, but to do it on a regional basis so that we have economies of scale, et cetera. And we do, anticipate that, we should be able to, provide about $200 million of investment in the transport and logistics of the pharmaceutical space, every year. So this translates to the ambition to at least invest about $3 billion over a 10-year period, of which $1 billion will go directly into production up to GMP standards, and then $2 billion would be the related infrastructure. That would be the roads, the airlines, the temperature-controlled storage, etc. But, let me close by saying I'm very excited, and I continue to be excited about the India-Africa South-South axis. It includes investments, but it also includes knowledge sharing. And I look forward to visiting India for the conclave later in June. I almost think that we are in June already. And once again, my condition of traveling all the way to India is I want to actually, realize some South-South investment opportunities, looking at Indian companies that want to locate part of their global supply chain, and also investments in the pharmaceutical space for, through joint ventures primarily with African pharmaceutical companies. Thank you very much.
Indeed, that was an interesting perspective. Thank you, sir, for sharing your valuable inputs. Ms. Aparna Bhatia, Advisor, Department of Economic Affairs, Ministry of Finance, Government of India, has more than 25 years of experience working across various departments in the Government of India. She is currently in charge of the divisions dealing with multilateral and bilateral funding agencies, including matters relating to sustainable finance and international economic relations in the Ministry of Finance, Government of India. May I kindly request Ms. Bhatia to come forward and share your views.
Eminent panelists, participants present here and those joining virtually. First and foremost, very happy Africa Day to all of you, and wish all of you, in addition to greetings on Africa Day, the greetings because it's a dual day, it's also greetings on Africa-India Partnership Day. So we've chosen our day very well. A very good morning to all of you. It is indeed a pleasure to be part of the prestigious Africa-India Partnership Day and get to interact with the distinguished representatives from multilateral institutions and industry experts. I would like to begin by congratulating African Development Bank Group and the Exim Bank of India for organizing this very important event as part of the official agenda of the African Development Bank annual meeting since 2013. The trade relations between India and Africa go back to many centuries. Over time, the trade ties have expanded substantially, with India now being Africa's fourth largest trading partner. Engaging with Africa is the key priority for the Indian government. To strengthen the cooperation and to advance its diplomatic reach in the region, Government of India has established 18 new missions in Africa in 2019. We have also recently revamped the Indian Development and Economic Assistance Scheme, IDEAS for short, under which India extends concessional lines of credit to various countries and where Africa is a key focus region. This year's Africa-India Partnership Day is in sync with the theme of the AFD annual meetings, which is mobilizing private sector financing for climate and green growth, sharing India's and Africa's experiences. There is tremendous potential for India to support Africa in their green transition. In 2015, Africa adopted Agenda 2063, a framework that focuses on the inclusive and sustainable development of the continent through adopting alternate technologies to fulfill its growing energy demand. Against this backdrop, India would like to further strengthen and explore more avenues to advance its engagement with the African region, with focus on green transition to combat and mitigate climate change impacts. India has a very successful renewable energy experience, as was slightly mentioned earlier by MD Exim Bank. Renewable energy sector in India is among the fastest growing in the world. In terms of installed capacity, India ranked the 4th largest in the world in 2022. Solar power accounted for over half of India's renewable energy capacity, and as was mentioned by Harsha earlier, growing at almost 25% during the period of 2018 to 2023. India's installed solar capacity has also reached around 66.8 gigawatts in 2023. There is also installed capacity for wind power, biopower, small hydropower, which is growing at a rapid rate. We are also looking at harnessing wind capacity in a very large way. In fact, in 2022, Bhadla Solar Park in Rajasthan in the state of India is now the world's largest solar park. It has got 2250 megawatts of solar projects commissioned and is spread to more than 14,000 acres. India's growth in renewables has been aided by supportive government policies. The Reserve Bank of India has included renewable energy under its priority sector lending norms. RBI has also increased the lending limit for renewable energy for the borrowers who are generators of solar, biomass, wind and micro-hydel projects. Government of India has recently announced the Green Hydrogen Mission, which envisages to produce around 5 million tons of green hydrogen by 2030 and renewable energy development. In 2018, the African Hydrogen Partnership was also set up with a continent-wide umbrella association dedicated to developing green hydrogen-based chemicals and fuel cell technology, showing the strong commonality and potential synergies. Transport currently makes up around 10% of Africa's total greenhouse gas emissions, which is expected to increase in line with sub-Saharan Africa's expanding vehicle demand. As its vehicles grow, the challenge for sub-Saharan Africa will be to push for more sustainable mobility and avoid the risk of having the used ICE vehicles. Consciously, India today is trying to move to electric vehicles after having experiencing a flourishing automobile market in the last 2 decades. India now has a target of achieving 30% of electronic vehicle penetration by 2030. Government of India also has a PLI scheme, production linked incentive scheme for automotive sector, in which EVs are being covered. In 2021, Government of India has also approved PLI scheme for manufacturing advanced chemistry cells in the country. Many of these experiences and others, India would be very happy to share with any of the countries in the African continent, whoever are interested. And I noted in interest the sectors which were indicated by Mr. Solomon. Exim Bank has been, on behalf of Government of India, involved in supporting the energy projects in Africa, and experiences from them could easily be replicated for greater transition in Africa by India as well. Some of the solar projects which have been extended by Exim Bank on behalf of Government of India include a project with Government of Niger, which was the country's first solar plant. Similarly, a line of credit to ECOWAS Bank of Investment and Development resulted in Exim Bank supporting a solar project for Sierra Leone to enhance their access to alternate and cheaper sources of energy supply for poverty reduction in off-grid areas. This has not only resulted in diversifying sources of energy, but also has ensured security of supply. A line of credit extended to Mozambique resulted in technology transfer for manufacture of solar PV modules based on solar cells as raw material. This project has benefited Mozambique by enabling the country to manufacture solar PV modules locally and consequently resulted in reduction of import of the same from other countries. India is also a founder of solar electrification system in Khadar village, which is around 2 hours from Khartoum, bringing light for the first time to the lives of around 1,500 villagers. On behalf of Government of India, Exim Bank has also extended a concessional line to Government of Rwanda for construction of a hydropower project, which was Rwanda's biggest hydroelectric power project. Both Harsha and Mr. Solomon have talked about the role which the private sector has to take as a lead in. And yet I have been talking about lines of credit. The lines of credit for us are a very important instrument. We ourselves are a developing economy. For sharing our experiences with the African nations as to how to utilize the limited resources to provide a proof of concept. A private sector will come in only once many of the issues which are in the new economy, a new technology or a new sector are addressed. So certain projects relating to lines of credit support such initiatives. Similarly, there are various other projects which have been taken up by Exim Bank, which advance resources credit to the private sector itself to further facilitate climate action and climate technology. As I would conclude, I would like to highlight that these are indeed exciting times for India and the various African economies in the developing world. It is very important to mobilize the private sector financing for climate and green growth, since any government of any country would not be able to make good this requirement by itself. However, it is the responsibility of the governments to establish the proof of concept so that there is an appetite from the private sector to take it forward. I am very hopeful that this session organized by Exim Bank will provide a lead of discussion on potential ways forward. Many reputed Indian firms have come forward and their experience in the Indian context will help both India and African economies to work together. We will be happy to share its experiences in this growth cycle as Indian companies look forward to working with those in Africa. I look forward to hearing further discussions during the day. Thank you.
Thank you, Madam, for sharing your views, highlighting the strong relationship shared by Africa and India and the potential to further it within the ambit of climate and green growth. We now look forward to hearing from our distinguished speakers on the theme of today's Africa-India Partnership Day. Ms. Met Knudsen is an experienced ambassador with over 25 years of service in the Danish Foreign Services, including 15 years in senior management. She is a strategic and result-oriented leader, specializing in complex development programs. At the African Development Bank, she is the Executive Director representing Nordic and India. May I request Ms. Knudsen to deliver her special address.
Thank you very much, and good morning, ladies and gentlemen, and especially warm good morning and welcome to the representative from the Ministry of Finance of India, and of course also all the representatives of India Exim Bank. I also want to start by saying a very happy Africa Day and a very happy India Africa Partnership Day. Unfortunately, the Danes have lost their traditional garment over the centuries, but in respect for the day, I thought I should at least wear something more colorful than the usual sort of black and gray and blue of the Nordics. Maybe also a brief comment to my good friend VP Quainer. I'm glad that you realize that you have to take care and protect and promote the interests of women, because soon you will be outnumbered on the world stage by the women. So, more serious note, thank you very much for giving me this opportunity to address the Africa-India Partnership Gathering today. I am personally very honored to represent India in the African Development Bank, so it is a special pleasure for me to attend this event today. Of course, this year's annual meeting of the African Development Bank Group takes place at the backdrop of increasing global challenges which have a profound impact on Africa. Russia's invasion of Ukraine has deepened the economic strains already faced by African countries as a consequence of the COVID pandemic, which most countries were just starting to recover from. But the most profound crisis globally is, of course, the climate change crisis, the impact of which are brought home to us every day. VP Quainer mentioned some of the effects in Africa: prolonged droughts, catastrophic cyclones and floods. It would be very easy to despair, but hopefully this annual meeting can send a strong signal of optimism in terms of the resilience of African economies, but also of the strong positive results that can be achieved by our joint engagement in promoting a green trajectory for Africa. The present event is a very important opportunity to strengthen that joint engagement, not least together with the private sector. As highlighted by the African Economic Outlook for 2023 that was launched the other day, Africa would need more than $200 billion in private financing per year to close the estimated gap in climate financing. That's not an easy target to achieve. But as the report also stresses, Africa will have some of the highest growth rates in the world in the coming years. It has a young and energetic population. It has an enormous potential for green energy. And it has an abundance of natural resources, including in the minerals needed for the green transition worldwide. So this should be a very strong incentive for private investors to look towards Africa. But what is then needed for Africa to become more attractive for private investors, and especially those keen to invest in green growth? Personally, I'm not really an expert on these matters, but listening to the debates this week, I would like to highlight 3 elements I see as critical for the path ahead. First and foremost, it's obvious that African governments must address the perceived high risks of investing in Africa and focus even more on improving governance, not least economic governance, and creating a conducive framework for private investments, which of course would include having the right policies, regulations, and not least long-term strategies to achieve a green transition, to have such strategies in place. And this is an area where the African Development Bank is keen to work with governments and is capable also of providing expert advice in an atmosphere of trust and mutual respect. Secondly, we often hear that there is a lack of good bankable projects in support of the green transition. So we must find ways, including through innovative financing, and I think previous speakers have alluded to this, where governments, the private sector, development partners, and multilateral institutions such as the African Development Bank cooperate in moving projects from ideas to reality. Finally, I think an important message also to this event is that we must look at establishing not only bilateral partnerships between Africa and India, which are very important, but also trilateral partnerships between, for example, Europe, India, and African countries and institutions, both public and private sector based, to enable African economies to benefit from technological progress in other parts of the world, or vice versa, I should add. And such partnerships should also support production and value generation in Africa. So, for example, natural resources are not exported unprocessed, as too often is the case. I think we have heard a lot of examples from previous speakers on areas where this cooperation can be established. I would say myself, I visited South Africa recently together with other members of the board of the African Development Bank, and we heard some very interesting developments developments underway in relation to the production of electrical vehicles, and I think it was also stressed the capacities of India in that regard. Earlier, when I was back in my home country, Denmark, I also met with the Danish Investment Fund for Developing Countries, IFU, and I heard as one example that they are now investing in some Indian clean technology and renewables companies, and these companies, I understand, are thriving and benefiting from this framework that the Indian government has put in place. But what is interesting in this setting is that these Indian companies that the Danish financing was going into were actually expanding into Africa to base themselves also in Africa with the experience they had from their home country in India. So I found that kind of cooperation quite interesting. These are just a few examples, and previous speakers have had many, many more. But I think that what is clear is that we need all elements: governance, financing, project development, technological cooperation to really boost Africa's green transition, which of course will be to the benefit of the peoples of Africa, but certainly also for the rest of the world. So with these few remarks, again, thanks a lot for giving me the opportunity, and I look forward to listening to the other speakers and debates today. Thank you very much.
Thank you, Madam. Ms. Pragya Gupta, specialist, has been overlooking resource mobilization at the International Solar Alliance, with which she has been associated for the past few years. May I now request Ms. Gupta to share your views with us.
Good morning, everyone. I think everyone's been talking about the attire. I think I'll just say I went green, and I hope that green is the new black. So most probably, I think next time when we're all in the same room together, we'll all be wearing green. So yeah. Firstly, I think I'd like to thank the African Development Bank and Exim Bank for inviting the International Solar Alliance to be a part of this conference. The relationship between ISA, AFDB, and Exim runs very strong indeed, and we're honored to be working with these two champions of the financial world. ISA has recently signed a letter of intent with AFDB and NTPC to collaborate and implement of solar parks projects in Africa. We're in discussion with Exim Banks for credit lines, and we're also launching a new solar financing facility for Africa, which looks at the payment guarantee mechanism, the insurance mechanism, and the investment fund, which I would be talking about in length. But I think before I delve in, and because it's the India-African Partnership Day, let me cite what the Honorable PM of India, Shri Narendra Modi ji, always says, Vasudhaiv Kutumbakam, which means one earth, one family, and one future. At the recently concluded G7 meeting held at Tokyo last week, our PM Modi ji said that to bring about a change, there is a need to accelerate the scope of discussion and to change the behavior to solve the problems. We have to listen to the call of Earth, and we have to change ourselves to reach the ambitious goals of reaching net zero. Let me talk a little bit about what ISA, the International Solar Alliance, is all about. We are a 114-member country organization looking to make solar a preferred choice of energy source across the globe. ISA's goal is to mobilize $1 trillion of investments by mobilizing it in different geographies across the world. We are also a very international partner and a proud partner of G20's presidency in India. But before I bore you, let me talk about the two financial products which are working and which we've launched recently last year at COP27 in Sharm el-Sheikh only. One of which is the first solar financing facility, the blended finance facility, which will again look at about USD 500 million of investments across various regions. It'll attract private capital to flow into the understated markets in Africa. We're looking at decentralized solar, and the solar facility will look at providing clear and reliable energy sources, enable deeper innovation and capacity building in countries. It'll open the solar markets across various regions and accelerate transition to net zero. In fact, since you mentioned, we held the first Nordics roundtable in Copenhagen in March, and we did have the likes of IFU, the Pension Denmark, and others to invest into our solar facility. The next roundtables are going to be held in the London Stock Exchange, and we would be coming back here in the African region in Togo in July. This brings me to the second product which we launched in COP27 again, which is the SolarX Startup Challenge, an entrepreneurship challenge which looks at identifying 20 startups across 10 problem statements in Africa. And I must compliment that we've received 180 plus applications from the whole region. We saw startups from Egypt, Namibia, Ethiopia, Kenya, Tanzania, and others, to name a few. Evaluations are underway, and we would be looking to honor women entrepreneurs as well. The innovation received this year are inspiring to us. We would be looking to open solar startup ecosystem to across various geographies. But what really matters is that private capital is the one that will be speeding up the resources in this region. Through this challenge, ISA aims to handhold them and to unlock private capital not only in Africa, but actually doing a handholding and matchmaking across various regions. We also are looking to raise resources and, of course, create a pool of financial institutions and DFIs by creating a bankable pipeline of projects on ground. This will help ISA in achieving its goal of reaching and mobilizing USD 1 trillion in 2030 by, of course, accessing 1,000 million people, installing 1,000 gigawatts of solar energy, and mitigating emissions in the global space. I also have my colleague, Mr. Mohit Jain, who's sitting here, who leads the projects team in ISA. And some of the projects that we're working for in Africa range from affordable financing at scale to looking at implementation of solar parks, looking at green hydrogen, which you spoke about, looking at PV and battery waste management, and of course, the solar rooftops. I think I would just like to end by saying that we have different products, and Africa is one of our key markets wherein we are looking to mobilize resources. And once again, would like to thank everyone and each one of you for this very, very strong partnership. Thank you, everyone.
Thank you, Madam. That brings us to the end of this session. Thank you to all our distinguished speakers. We deeply appreciate your valuable contribution to this Africa-India Partnership Day. As a token of our appreciation, we would like to present our guests with Sankalp Taru certificates. India Exim Bank has been supporting Sankalp Taru Foundation through their rural livelihood, community-based and city-based plantation model under the aegis of corporate social responsibility. 10 trees have been planted in each of your names, which can be tracked using the QR code present in your certificates. These certificates will be delivered to you virtually. Thank you, ladies and gentlemen. May I request all the speakers to please come forward for a group photograph? Thank you. We would now begin with the panel discussion. May I request all the participants to please take your seat as we are about to begin the panel discussion. Good afternoon, ladies and gentlemen. We are beginning with our panel discussion. The panel discussion aims to provide insights and perspectives on how African and Indian companies and development banks can work together to promote sustainable and inclusive economic growth and development. We hope this discussion will be engaging and insightful for all the participants. For the panel discussion, I would like to invite Ms. Dipali Agarwal, Chief General Manager and Chief Financial Officer of India Exim Bank, to moderate the session. From development banks and Indian industries, we would like to invite on the dais Mr. Manish Chaurasia, Managing Director, Tata Clientech Capital, on the dais. Mr. Chaurasia is a highly experienced financial service professional with a strong background in origination, credit risk assessment, and syndication in the Asia-Pacific region. Ms. Olaronti Doeti, Director, Export Development, EFRI Exim Bank. Ms. Doeti is a seasoned financial professional with a wealth of experience spanning over 17 years. With a strong educational background and expertise in project finance, she plays a key role in driving the bank's strategic initiatives and supporting export-oriented projects. Ms. Dia Eldin Salah Mustafa is the Head, Group Business Development, Sterling and Wilson Renewable Energy. Mr. Mustafa is a highly experienced professional in the power and energy sector with 28 years of industry expertise. Ms. Mary Kamari, Group Executive, Corporate Affairs and Investor Relations, Trade and Development Bank. Ms. Kamari is a highly accomplished development finance professional with 20 years of experience in leading resource mobilization, program management, and business development initiatives. Mr. Mohan Preet Singh, Executive Director, Premier Energies to come. Mr. Singh has over 15 years of experience and has contributed in bringing new solar projects for Premier Energies, which has benefited growth of the business of the group. Thank you to all panel members who have joined us today for the discussion.
Thank you, Swati. And thank you, everyone, each one of you here for gathering here this morning and spending the time to celebrate Africa-India Partnership Day. For us, for India Exim Bank, it has been a very engaging and fulfilling journey since 2013, since we have been celebrating this Africa-India Partnership Day. We have just heard some interesting insights from the earlier panel, and now we'll discuss more on the climate change, the green growth, and what the participants from the private sector as well as the financial institutions have been doing in this space. So I'll have 3 rounds of questions posed to the esteemed panel here, and roughly 5 minutes is what you have to sum up your brief response. So let me begin with Manish Chaurasia ji, who is the MD Tata Clientech. Could you please briefly introduce your JV and your company, which is a JV between Tata Capital and IFC, and share your views on transition growth and climate change. Manishji.
Sure. So thank you for inviting me here. Thanks to Exim Bank. And I would like to wish all the participants here a very happy Africa Day. Tata Clean Tech Capital, this is a joint venture company between the Tata Group, which does not need any introduction, and also the IFC Washington. So 80% stake is held by the Tata Group and 20% is held by IFC. Essentially, we are a climate finance company, and our mandate is to fund projects in the clean tech segment. We offer products like term loans, advisory, and going forward, we are also looking at innovative products like leasing and also private equity. We started in 2013. At that time, this concept was still evolving. But thanks to the vision of our founders, that they thought that a climate finance company will be required in future. And I'm happy to say that since our inception, we have funded about 350 projects, and we have disbursed loans aggregating about $3 billion US. And today our outstanding book is about $1.5 billion US. As the name suggests, clean tech finance, we fund projects which are in solar segment, wind segment, water segment, energy efficiency segment, electric vehicle segment, and so on and so forth. I'm happy to say that while we have funded over 300 projects, but we have maintained a very good book. And today in our book, there is just one non-performing asset. So what we have proven is that climate finance is something which is pretty much which can be done by the private sector. Today, if you see most of the green investment banks globally, they are all with public funds. But that way our company is unique because probably we are the first in the world which are with the private funds. And as I told you, we have eminently proven that this model can be a very scalable and a profitable model. When people talk about climate and climate change, sometimes main focus is on the risk. But I'm happy to say that along with the risk, there also comes a lot of opportunity. And that is what we have proven, that private sector can convert this whole debate more towards the opportunity rather than only looking at risk. We have intermediate lot of funds because what we realized was that this segment needs funds both from the domestic capital market and the international capital market. So one of our business model has been that we have mobilized a lot of funding from the multilateral institutions, from the international climate investors. We have partnered with the Green Climate Fund for developing the solar rooftop sector in India through a $100 million line, through which already we have funded more than 600 rooftops. Similarly, we have collaborated with institutions like FMO, like AIIB, like JICA, and so many others, through which we have brought in foreign funds into India. Going forward, we are very optimistic, and we feel that India itself needs over $1 trillion for fighting the climate change. And good thing is that a lot of these projects are viable projects, and we feel that there is a tremendous scope for growth. So this is what I would like to tell about the Tata Clean Tech Capital. Thank you.
Thank you, Manishji. Now I'll move on to Ms. Doherty. Afri-Exim Bank has an extensive presence all across. Can you please share the efforts that Afri-Exim has been taking for mobilizing the private sector funding for climate and green growth?
Thank you very much. It's a pleasure to be here with you today. I want to thank the India Exim Bank for extending an invitation to Afri-Exim Bank, and also for the Africa Development Bank for organizing this at the sidelines of the AAM. So for us, as a multilateral trade finance institution on the continent, we are quite aware of the challenging issue climate finance or climate change poses to the continent. We are also very aware of the need of the continent for funding. During President Adesina's opening ceremony, he had mentioned that Africa would need about 200 billion per year to be able to meet its goals in terms of climate change. He also mentioned that every year Africa is only able to attract about 3% in funding required, and of this 3%, just 14% is attracted from private sector financing. So it poses a lot of challenge to DFIs like ourselves on the continent. And one of the things we've done is to, adopt a kind of different approach where we break down our intervention in climate finance into 4 key areas. One key area for us is partnership, because we know that we cannot go in it alone. We need partnership across DFIs, across international organizations, RECs, to be able to address the climate financing gap on the continent. Second for us is co-creating financing platforms with our partners, and we've been able to do this quite a lot. I'm going to give examples of that as I go further. The third is policy and advocacy support, because if we're going to be able to mobilize private sector financing into climate space, then we need to ensure that we can support our countries in putting in place very attractive policies to attract investment. And then the fourth for us is capacity building and technical assistance, both to our member countries and financial institutions that we support. So coming on partnership, I would like to mention a few of the partnerships that we've had over the years that support our intervention into financing of climate-friendly projects, renewable projects, and sustainable projects on the continent. One of the key partnerships we've had is with the AFD, the Agence Française de Développement. We collaborated with them in July 2020, and we were able to come up with a 150 million financing program. And this program is to support green and low carbon and socially inclusive projects across the continent. And through this project, we were able to support our financial intermediaries. You know what we do mainly in Afreximbank is trade finance. So we reach out to our trade finance intermediaries and are supporting them with lines of credits to finance projects. We've been able to support banks like Bank Misere and the Development Bank of Rwanda. And we've been able to see these lines going into sustainable projects that cut across solar PV projects, hydro projects, and sustainable special economic zone developments. Furthermore, we know that the effect of climate finance goes beyond the energy space or financing energy projects. We know that for Africa, most of our countries are vulnerable and they've been impacted by climate finance. Food security has become a challenge because of the impact of climate change on the continent to vulnerable countries. And because of that, we've partnered with World Food Programme, and we have a 3-year MOU with World Food Programme and the Africa Continental Free Trade Area, where we are seeking to disburse loans and credit lines to agro-business and agro-processors to be able to boost their capacity across the continent. I must say to you that this project is going very well, and we are implementing it in some of our member countries that have faced the impact of climate change, countries that faced the impact of Cyclone Freddy. I'm talking of Malawi, I'm talking of Zimbabwe, I'm talking of Zambia, and this is something that is on the front burner, and we are pushing with our partners, World Food Programme and the AFCFTA Secretariat. Another thing we are doing is we are focusing on our core strengths, which is the provision of credit enhancement instruments in form of guarantees and insurance products to attract climate finance from the private sector into the continent. A lot of people have stressed that why Africa has not been able to attract much funding in the climate space is because we don't have a developed domestic capital market, etc. We partnered with UNECA last year to set up the Liquidity Sustainable Facility. And that facility is to support African countries to be able to raise green bonds in the market. And I'm pleased to tell you that at the sidelines of the last COP27, that ironically was held within the same premises, we were able to launch an initiative, a product with UNECA and a line under the Liquidity Sustainable Fund to support member countries to access green bonds and attract private sector financing into the continent. Then the last amongst the list, not the least, of course, of the partnerships we've been able to build over the year has been with the Indian Exim. Since between 2018 and 2022, we've been able to get lines of credit of up to 375 million from India Exim. And these lines of credit have been going to support sustainable projects across the continent. Some of the projects we've been able to do has been mini hydro plants in places like Rwanda. You might look at it as small projects, but they impact these communities and they change lives and they boost trades. And so we intend to ensure that we continue to focus more on this. We also created a fund for export development in Africa, which is an equity fund, because we realize that not only do we need debt financing and attracting of private sector stakeholders to support climate change, we also need to be able to tap into patient equity capital, because like the President of India Exim just said when she was giving her opening remarks, you will need to ensure that you get patient capital for the new technologies involved in the climate space. And because of that, we have a fund for export development in Africa and a subsidiary of Afreximbank that was set up to be able to attract patient capital. Up to date, they are looking at projects worth 110 billion within the renewable and sustainable space to be able to support Amenga countries. So these are just a few of what we've been doing. Thank you.
Thank you for that. I will now move on to Mr. Sala, who heads the business development of Sterling and Wilson Energy Limited. Mr. Sala, can you just take us through the journey that Sterling and Wilson has been, doing here in this space of renewable energy?
First of all, thank you very much for inviting me to attend this event. Myself, generally, I have been going to India a lot of times, and I met your team there in a lot of sessions. Even in our group company, you are part of Shapoorji Pallonji Group. We have a special dedicated team for Africa. I attended a lot of meetings in Africa, in Kenya and other places where we're discussing a lot of opportunity in Africa which need kind of investment or EPC work. First of all, our company is, we are part of Shapoorji Pallonji Group. We are a 150-year-old company. From the date of founding our company, our rule is to make better for the environment. And this one of the core of our core DNA is environment and the green energy. In India, especially because of the great economic there and the rules there, and we have a big chance there to have a lot of work there. Especially when our Prime Minister, Mr. Modi, mentioned that green energy is same like gold mine. So please invest here. So after putting all the rules and for this, lot of developers had came to India for investment. So this gave us a lot of portion of work. Our company mainly is one of the leading solar EPC contractor globally all over the world. We start from design, engineering, procurement, construction, and O&M. Even O&M is not doing for our work, we do also for the third partners. Mainly now we are specialized in construction, in hybrid and energy storage, and also floating solar and utility solar. We started our business solar from 20 years, and now we are become one of the lead EPC contractor globally and mainly in Africa and GCC area also. For us in India, it is for sure it is our great market there, and we are expanding more there because of the economy and a lot of development are coming now, and we are hoping now we are expanding mainly in Africa now, and we'll discuss point now. Okay.
Thank you, Mr. Sala.
Yeah.
I'll now move on to Ms. Mary from TDB. We understand that you have come up with a new instrument for climate change. So can you elaborate more on this new instrument that TDB has launched?
Thank you very much, and thank you very much for the invitation. At TDB, innovation as well as diversification continues to be the strategy of the bank. And I'll talk about innovation from different aspects: innovation on our capital structure, innovation on our product and services, as well as innovation for the market. As you rightly said, Trade and Development Bank is a regional development finance institution. We cut across Eastern and Southern Africa. We've recently gone into West African market, that is Senegal and Ghana have recently joined in the context of the ASFTA. In terms of the new instrument, 2019, 3 years ago, our Board of Governors approved the instrument called green shares, one which was listed and unlisted, so two instruments. So we started with the unlisted one, which we called green shares, which is themed capital. And the reason why we issued those shares was built on the success that we had in the last 10 years. In the last 10 years, we did a lot of frame reforms, including our capital structure, where we invited, originally we were owned by member states in our Eastern and Southern Africa. So we invited pension funds to join the bank. So we were able to raise close to $300 million. And this pension money, the capital came from the pension funds. Pension funds in our member states. The first institution that was able to characterize this was the AFDB. They took the lead, followed by China, as well as our pension funds in our member states. Recently, we just had IFU join the bank, and they doubled the investment from $20 to $40 million. Why did they invest in the bank? I think that was very key. The bank was very profitable. We committed to provide a return on equity of over 10%, and we've maintained that with a yield of 2 to 3% in dollar terms. So very disciplined, we were able to pay dividends in the last 10 years, and we realized we need to issue another share, which is green shares, which is themed capital. Again, AFDB took the lead. They gave us at the COP27, they were able to invest $15 million. Within less than 3 months, we were able to get another fund with another $15 million. And the innovation we had was to make sure that, as you already heard from the conversation this week, the challenges of bankability. So we're able to target funds that were able to give us both project preparation as well as equity. The innovation is we'll be paying dividends to these institutions, but the same funds are also giving us project preparation capacity to build the capacity of these entities that are looking for funding. So what are we committing to the investors? It to give returns. Of course, these shares, they have an exit option after 5 years, as well as they are different from the previous shares that we issued. The previous shares to pension funds, they invest for dividend purposes, but these green shares, they will invest five years, they're able to exit, but we give them dividends, but with no voting rights. So these are good investment. We've already, as I mentioned, we've already had 3 institutional investors that are coming in, including our funders. But previously, in the last 4 years, we also, like Afrexim, partnership continues to be the strategy of the bank. We're able to raise around $400 million from the World Bank. We also got funding from EIB. We also got funding from AFD. We also got funding from CDP Italy, as well as FinDev Canada. So we continue to raise funding from our bilaterals, but those funders are also have interested to buy these in great shares.
Interesting. Okay. Now we move on to Mr. Singh. He is actually from Premier Energy, which is a company who has received the first LEED Gold rated solar and module manufacturing facility award. Now, Mr. Singh, can you just take us through the journey that your company has come through till here?
Thank you, ma'am. I'd like to thank the Exim Bank and the AFDB for getting me here, and I really appreciate a wonderful event here. Okay, Premier Energies basically started its module manufacturing facility in 1995. We just started with the 3 megawatt, and today we are at 5.5 gigawatt integrated cell and module manufacturing facility at Hyderabad. So basically, our management, the top management, was very, very keen initially itself from the startup of maintaining the best business practices, and over a period of time, the sheer hard work, today we've been awarded the best ESG, that is Environmental Sustainability and Governance Award by the Government of India at Delhi recently. It was last month. In fact, I proudly say that Premier Energies has been the first company to get a PE funding in manufacturing sector from a green energy foreign fund, and today we are working towards it. A small example of that is, like as you know, in solar cell plant, you require about lakhs of liter of water every day. But we have a huge water recycling plant where we do recycling and reusing that water, committed to zero liquid discharge. So we almost recycle and reuse about 95% of our water, and what 5% is left back is sludge, which is converted into cement blocks and used for construction. So there is no pollution that way. We have installed another step forward. We have installed 7 megawatt rooftop capacity at a solar plant, where we are using it for the solar plant, thus reducing our dependency on electricity generated by fossil fuels. High efficiency pumps are being used to circulate water through the plant, which just work at probably 1/5 of the normal energy, which use 1/5 of the energy of the normal plant pumps. So that way, using best technology and having a collaboration of best of the AI, we are trying to enhance our production and reduce our dependency and using more of green energy. Thank you.
Thank you. I'll come back to Mr. Chaurasia. Mr. Chaurasia, in your opinion, what is the willingness of the industry globally and in India to invest in the transition growth? We would also like to know if you have at any time faced some kind of hurdles in getting into this transition growth.
So, while we talk about huge funds required to fight global warming, but today the good news is that good portion of this funding required, I would say even 2/3, is in the money. Meaning that the projects which will be implemented are actually viable projects. So naturally, if the projects are viable, then private sector will get interested. But then I think this is not something which can be taken for granted. The most important thing is that all of these projects, if you take solar or you take wind, mostly it is the government public institutions who are the off-takers. Like if I take solar power, then most of the solar power in India is purchased by the DISCOMs. So there is a contract of 25 years between the developer and the off-taker. Now the important thing is the enforceability of that contract. What we have seen in the past is that sometimes when the cost of power comes down, we spoke about the changing technology. Then the earlier off-taker feels that he is getting power at a high cost and he tries to renew that contract. I think this enforceability of the contract is the key thing. If the governments can ensure that all the contracts which are entered into are legally enforceable, then I think it will give a huge impetus to the sector. So that is number one. Number two is that there are other factors which are important for project implementation, like availability of land, like availability of financing, and the predictable policies. I think these are other important factors which we need to streamline. And I think once this is streamlined, then at least 2/3 of the investment required will not be a problem. That leaves a 1/3. We are still talking about important technologies, like technologies for storage of power, which can be a battery technology or which can be a hydrogen technology, green hydrogen I mean. So for this technology is still evolving. Now here definitely standalone, some projects will be viable, some projects will not be viable. So here probably some kind of an initial impetus will be required from the governments in the form of subsidy. But it is important to remember that these subsidies need to have a sunset clause. This cannot continue forever. If you take example of solar power, then initially about say 10 years back, that power was very expensive. But once the government started giving incentives, then a lot of thoughts came into this, a lot of new technologies came into it, a lot of scale came into the sector, because of which the cost started coming down. And today actually for most of the projects, the cost of wind and solar is much cheaper than the cost of fossil fuel power. So for some technologies, definitely government incentives are required. But the important thing to remember is that at least for 2/3 of this, the interventions are not required. What is required is the proper framework for project implementation. Then we come to some other important aspects, like adaptation. Now adaptation is one thing which is extremely important. We know for sure that while a lot of efforts are being made to fight climate mitigation, but so much carbon has been already emitted in the atmosphere that warming is definitely going to happen. And definitely in the future we are likely to see quite a few extreme weather events. Now for adaptation, I think a lot of innovations will have to need to come. Probably it will have to be funded through philanthropies, maybe through the carbon trading market. So that is one area where private sector will not come forward, where governments will have to take a key role. But as I told you, the good news is that for most of the investment, the governments have to just ensure that the project execution framework is proper. And most important thing is the enforcement of contracts. That's what I would like to say.
Sure, I agree to some extent on that. Ms. Ulluranthi, you did give a lot of examples when you spoke earlier. So is there any specific instance that you'd like to share with us where AfriExim would have extended or created a success story in terms of climate change mitigation or transition finance, either solely or through co-financing?
Thank you very much. So, like I mentioned to you, we're a bank, so you will expect that our interventions will be majorly financial, oriented. Over the last 3 to 4 years, we've been able to disburse about 3 billion in support of sustainable infrastructure projects. We are focused mainly on mitigation adaptation, mass transit solutions for our member countries. 2 of these are very success stories that we like to tell people about, and it spurs us to want to do more. For instance, we supported the development of rail projects in Tanzania and Ethiopia, and these are sustainable rail projects that have contributed to reducing carbon emissions and ensuring efficient means of transportation within these 2 countries. We currently have a strategy to support more member countries in developing efficient transport systems. We have project pipelines of up to 4 billion in places like Ghana, Liberia, Sierra Leone, and Gabon. And apart from this, we also were able to deploy financing solutions to support the creation of efficient and effective border posts in Southern African region. And one of the reasons why we did this was because it's not only would facilitate intra-African trade, support the implementation of the AfCFTA, but it also reduces waiting times at most of these border posts, reducing carbon emissions. We intend to roll out more of these solutions to support our member countries, not only in Southern Africa, but in other parts of Africa, to develop and create efficient border post mechanism. But apart from that, we've also provided over 500 million in renewable energy and energy efficient projects as at December 2022. Some of the key projects we've done that we could talk about include solar PV plants in Sudan, in Benin, and of course in the Republic of Cameroon. And we see these projects change lives in communities where they are located, being able to boost trade within the community, being able to change the livelihood of those communities, generate jobs, and encourage youth and women jobs within these countries. And not only that, we also were able to support the development of the mini hydro plant in Rwanda. So this incursion and provision of funds to support our member countries in energy efficient projects is one of the key things we would like to place out there. Other things we've done is, while supporting climate initiatives, we also want to ensure that we don't forget or leave industrialization aside. We don't think that the 2 cannot commingle. We believe that the 2 require each other to change the narrative of our continent. And as such, we've disbursed over 300 million to foster green industrialization. And this goes into the development of special economic zones on the continent that also seek to use renewable energy sources in powering the activities within the zone. And towards this effort, we've been able to support development of zones in Gabon, in Togo, and in Benin Republic. And we've been able to work with partners like Mahindra Engineering of India and Arise Integrated Industrial Platforms. And we seek to work more with Indian companies across these areas where they seemingly have a good comparative advantage. And another thing for us is that we've placed a lot of emphasis on project preparation. We know that the continent has a lot of needs within the renewable energy and energy efficiency space. But one of the key things that keep recurring is there are no bankable deals. So we created the Afrexim Bank Project Preparation Facility to support project developers on the continent, public sector, private sector, PPP projects, to develop bankable documents, technical feasibility studies, and etc., to be able to attract both private and multilateral financing to support the development of renewable and energy efficient projects. Another key thing we've done that I would like to highlight here, particularly with regards to the fact that India is also placing a lot of attention in the battery and electric vehicle value chain. I see a lot of synergies, and I see that India and Africa can collaborate in terms of technology transfer. We've been looking keenly at the battery and electric vehicle value chain. We currently have an initiative we are promoting in partnership with the Economic Commission for Africa, the Africa Development Bank, BADIA, and the ALSF, which is trying to develop special economic zones that are focused on, the manufacture of battery precursor equipment and electric vehicle value chain. We financed the development of a feasibility study in March 2023 by Arise Integrated Industrial Platform, their office based out of India. They are working on developing this feasibility study for us to be able to see how we can develop battery precursor manufacturing facilities within these special economic zones in DRC and Zambia. I call upon, partners within India, both India Exim, the Indian government, the India private sector, technology owners, to join us in sort of pushing on in this drive to stop the shipping of minerals out of the continent, but the development of these minerals in the continent. You know that DRC and Zambia account for 80% of cobalt, 50% of nickel, lithium is there, and all these are being exported out in their raw form. So we want collaboration with India to be able to support us on this initiative to establish battery manufacturing precursor plants in both India and Zambia to be able to process this. So these are some of the things that we've done, and these are some of the case studies we want to share, and we are keen and open to partnership to move forward in, industrializing Africa, but also in a clean and sustainable way. Thank you.
Thank you for that note. Yeah. Mr. Sala, on that note, I would also like to know, Sir Lingwen Wilson, they have executed so many projects, yes, both in India as well as globally. Is there any success story that you would like to share where you have really touched the lives of people?
Yes, for sure. First success story is Cochin International Airport in India. This is a world fully self-sustainability airport powered by sun. We executed the 40 megawatt solar PV plant for this airport, which is fully divided ground type solar plant, around 7 or 8. There is also floating solar. There is also rooftop solar for all car park. So this airport is fully dependable on power from sun. It generates daily around 16,000 units of power. If the load, also what is good about this project, if the load is less than this, so the reserve power is back to the network, and then we can reuse it again if there is less radiation and there is a big load of power at the airport. This project is one of the leading projects in which we do in there. As I told, it is 160 kilowatt unit per day, which is lead to through 25 years around 900,000 ton of meter cubic of carbon saving. So this is one of the success story which delivered in India. Another success story is delivered is the biggest solar plant which we executed in Abu Dhabi. It is 1.1 gigawatt project in Suwaihat along with our developer Marubini. This project has been executed in 23 months. We installed around 9.2 unit of solar PV modules. This project, in case of carbon saving, you can say we save 1 million metric cubic ton of carbon per year. This project is UE launched in their strategy 2017 for reaching 2050 to have 50% of their power is by solar renewable energy, for energy. So this project is save around 70% of the thermal power plant. Lot of record about this project. This project is the only project in the Middle East, East and West generation at the same time. So this give more radiation to the land. This project, when we participated at that time against European bidder, it is the selection for two things: the lowest tariff and the highest generation. So our core design gives the best generation for the land, 1.17 gigawatt, and the lowest EPC cost, which is reflected for sure in the lowest tariff, where our partner wins the project. This project, also one of the world record, we installed 200 megawatt in 2 weeks. So there is a lot of record in this project where we still use now. And one of the also of the record that is for this project, I can tell you the figures for this project. Also one of the figure is, you can say it is reduce CO2 emission by 1 million metric cubic in a year, and also it cut up electricity demand of 90,000 ton, 9,000 home, and also it removed 2,000 car off the road. So this is one of all the world record about this project. Also one of the world record also that we built over 5 million accident free safe also. It is also optimized time and cost calculation, and also one of the also bid criteria, minimum 350 megawatts. The bid criteria we bid until we reach 1.1 gigawatt. So till now also we are operating this project under operation maintenance for 25 years. And this project till now is a world record, one single project. Till now there's some project under construction, but till now still no project finished yet. So this is the two big stories we have.
All right, thank you, Mr. Salah. I would like to know from TDB now, in the earlier session you mentioned that you have raised lots of funds or resources from various places. I would like to know how are they mobilized and used, and if there are any success stories for utilization of these green funds which you could share with us.
Thank you. Again, like I mentioned, that innovation was the strategy we took as a bank, because we realized for us to be very effective, we need to look around the environment we are in. First, we issued those shares that I mentioned, targeting pension funds in our member states. And the second one was to raise these green shares that I mentioned, that were targeting climate impact funds. So the success story would mention here is about having a bank that is very well governed, with a very good returns that we've been paying to our pension funds. But one would say, what is your success? The success was, yes, we raised the money, but what was the
utilization of those funds?
So the utilization of the funds, we've been able to invest it in different projects. When we recently did our audit portfolio of the bank, we realized that $800 million is in the green portfolio. one of the success project that we invested in was in wind, which is Lake Turkana in Kenya. That's a success story that we'll talk about. There's a very good project we invested in Uganda as well, in the hydro project, as well as in the agriculture space in Madagascar. So those are key projects that are flagship projects that we invested in. And of course, when we reinvest this money, some of the, we heard yesterday that for private sector to invest, as we mobilize funding, private sector is looking for returns. They're not coming in to just give money. So we leverage our capital with the debt that we raise on the market. We, as I mentioned, we have various partners that we have given us lines of credit, the World Bank, the EIB, AFD, as well as the Italian and the Canadians. They've given us lines of credit to leverage on the capital that we've had. And of course, the capital is leveraged on the debt for the success project that we invested in different countries. I wanted to mention that we recently concluded our climate strategy and also developed our own taxonomy for us again to go out there to raise funding. Most of the investors that we are talking to, the first question is, okay, we know your success story, you've been able to raise equity, what's your strategy? So we just came up with our own taxonomy. Of course, it's aligned to the EU taxonomy, but we said we will have to have our own taxonomy that speaks to our member states that where we're going to be deploying these funds. Most of our partners, including the FDB, if you talk to them, the use of proceeds have been a challenge. So we had to engage our member states to find out how we're going to use these funds. So we've come up with a taxonomy that gives us our pillars, and those pillars aligns again with our corporate plan that we've set out to be. But we have various projects that we have just shared, and yesterday in the AFDB economic report that was launched, yes, there were challenges, but there were key highlights. They talked about opportunities in the ICT, in the renewable energy, in the transport, where we are heavily involved in as a bank.
Sure. Mr. Singh, I'm sure you will have a lot of stories for us to share. I mean, where you have made impact on people's life. Could you share a few with us?
Certainly, ma'am. I'd like to share just few examples of the premier success stories. One was we had done a DDG, that was decentralized power distribution, making of mini grids. We did almost cover 300 villages in India, which brought a difference to about 15,000 people. And it was a mini grid constructed in fabricated in a village with a battery bank supported and the power supply to all the houses in the village. And this village, some of the villages were so deep in jungle that our labor or our engineers had to travel probably 1 hour by boat, another 2 to 3 hours by walking, because there was no way of, the roads were not motorable, not even for a two-wheeler. So that has definitely made a lot of difference in those people's life, because they had last 50-60 years they had never seen light, and that definitely made a lot of difference for them. Another example which we are practicing now at Premier is women empowerment, and I can probably say that Premier right now has almost 35% plus women on shop floor at the fully automated plant in Hyderabad. Another example which Premier has initiated is we have a couple of transgenders also working on our shop floor, giving them a dignified chance of living. And especially for women and women employees, Premier very strictly adheres to 8-hour shift, picking up them from by buses from their homes, dropping them back at their homes. Thus, we are helping them with the job opportunities and trying to maintain a work-life balance. The target of Premier is to reach at least 50% women on the factory floor in future. That will probably another 1.5 years we'll be able to achieve it. Thank you.
Thank you. I'll now move on to the third round, but I'll start with you only, Mr. Singh. And see, what you have said right now is about India. What are your plans for Africa? Have you thought of entering into the African markets and exploring the possibilities of business here? Mr. Singh, आपको ही पूछ रहे हैं.
Sorry. Africa definitely holds a lot of potential and a lot needs to be done to uplift the standard of life through various efforts like AFDB, focusing on green energy, that's the key word for the today, then working on pharmaceutical, lot of scope, yes, I agree with you totally. In fact, Premier long back, about 7 years back, Premier had done 1.6 megawatt of, it was a hybrid facility, solar, battery and generator, where we electrified Kalangala Island, that was in Uganda, in Lake Victoria, which was inhabited by about 4,000 people and there was no power. And now recently we have completed 5 years AMC of the plant and it's still up and running. So that is one example there. We definitely look forward to doing more projects here in Africa and are currently in talk with various representatives, with obviously with Exim Bank support, we appreciate that. And we are open to involving local business houses along with us so that generates more revenue and opportunities for the local business houses also. Eventually, we are looking at maybe setting up a production plant with a sound local partner with a good government policy. So probably for Indian businessman perspective, it's time to wake up and smell the coffee. Thank you.
Thank you. Ms. Mary, you have of course highlighted the importance of climate change and financing in this space. According to you, how can India, Exim and TDB partner and what can we do successfully?
Thank you. We've had a relationship with India Exim for close to 18 years. So of course you've extended lines of credit. You also were part of the global syndicated loan recently that we issued. We are also currently negotiating around $100 million with the India Exim. So we plan, of course, to have that most of the lines renegotiated towards the climate space as well, because opportunities are in the climate space. So one of the discussion we are currently having with India Exim is around climate related project in our member states. I know we have concluded one of the projects in the infrastructure space as well as in the ICT space. So we hope to definitely shift the negotiations from the general line of credit to the climate space, because that's the opportunity we are finding in our member states. The other opportunity we had offered to the government was also to take equity. As you've heard, we have China as a shareholder. We've also invited India to join as a member state, to join in the Class A opportunity, but also in the green shares that we recently issued on the market. So I think those would be the opportunities we'll be looking forward to discuss with the government.
Surely, that would be interesting. Mrs. Sala, what are your plans for Sterling and Wilson for the African markets?
Yeah, first of all, the African continental is rich in renewable energy, but unfortunately now most of the resources did not utilize yet. In a recent report by IRENA and the FDBs, he mentioned that the resources in Africa will have the facility to have around 7900 gigawatt of solar, plus in addition to 1700 of hydro project, plus 491 also of wind project. Unfortunately, only Africa utilizes only 2 or 3% of this percentage. We as Sterling Wilson, we are the biggest lead player in Africa in solar renewal project. We constructed more than 1 gigawatt of project till now, and still we are resourcing some other opportunity in many African countries. But unfortunately, we found many governments still didn't put the policy yet. So what is really needed from this is urgently support from the government, comprehensive policy package that combines the pursuit of climate and environmental goals, and economic development and jobs creation and social equity and welfare for society as a whole. This is number one. And number two also is this: we need a strong institutional and international cooperation, including South-South cooperation and considerable consideration at the regional level. We really found in Africa, in many places, a lot of opportunity, but unfortunately, those 2 points still need a lot of work to be done.
Sure.
Yeah.
Mr. Dorothy, coming to you, I would like to know that AfriExim and DFI has a lot of potential to cooperate and partner. In your opinion, what and where and how can DFIs partner with AfriExim to spur up the green growth?
Thank you very much. I think one thing that has come out from this whole week that we've been here is that there really is enormous financing needs for climate projects and interventions on the continent. But what we need clarity on is how do we attract this financing and how do we get them at the costing that will make sense for our member countries to be able to intervene in critical sectors for climate mitigation and adaptation projects. One of the things that we believe we need to all do, DFIs in Africa and even India Exim coming together to collaborate with us, is to look at how we can work together to deepen the capital markets space within the continent, because this has been one of the reasons why we've not been able to attract, funding, particularly private sector funding into the continent for climate initiatives. The second thing I think we need to work on, which is most important and particular to me, is concessional financing window. We need to collaborate better, DFIs on the continent and even India Exim, in being able to develop concessional financing windows. And why am I saying this is very important? Because this is the only type of funding that we can use to support climate adaptation projects in those vulnerable countries. We will struggle to deploy commercial loans in such places to be able to change the narrative and turn around the economy. So I would like to see more collaboration between DFIs like AfriExim Bank, AFDB, India Exim, in trying to work together to open a concessional financing window to support climate adaptation projects. Then the third thing relates to what my co-panelists just spoke on, which is in policy and advocacy. Yes, I know India, you describe yourself as developing economy, but you have gotten to a stage where most African countries are aspiring to. But there are some learning points you've gotten along the way, and there should be ways where we can, support each other in terms of policy and advocacy, because our member countries need it. Most times the problem is not lack of financing. Sometimes it's lack of enabling policy, enabling reforms to be able to attract financing into these countries. I would like to see more collaboration between African DFIs and India Exim in terms of supporting our governments to put in place reforms, to put in place policies that can change narrative, that can enable us attract financing, that can enable us put this financing into critical projects and critical initiatives where they are needed. And then the last for me is capacity building and technical assistance. India has a lot of technology they can give to Africa to support African member countries. So I think we need to also move our head and direction away a bit from financing to also see what we can do better in the areas of capacity building and technical assistance support between AfriExim Bank, India Exim, TDB, AFDB, AFC, WFP, all of us coming together to see how we can intervene, build capacity, not only for us as DFIs, for financial intermediaries that we support, we on lend to, for companies, corporates, and even governments. So these are key areas that I believe if we can intervene across these four sectors, we will not only, change the narrative, but we will spur green growth across the continent. Thank you.
Very well said, Mr. Dorothy. Mr. Chaurashia, considering the shortage of funds like Mr. Dorothy just mentioned, how can Tata Capital replicate their experience in Africa? Any thoughts on that?
So clearly, as has been said, that government alone cannot play a, overarching role in fighting climate change, because there is a limit to government savings. a private sector will have to come forward and will have to play a very important role in terms of mobilizing capital from the countries where there are huge savings, and in terms of mobilizing capital from the domestic capital markets and putting it into the segment of green financing. Now in India, Tata Cleantech Capital has been extremely successful, and I think this experiment can be replicated in other geographies as well. But then there are certain important conditions. The first condition is that probably this experiment will succeed for those segments of the green financing which are viable. But as I told earlier, fortunately today, at least 2/3 of the investments are clearly viable. Important thing is to work on the enforceability of contracts, as I told earlier. Important thing is to make a policy which is predictable. Now this is very important in the context of the fact that today technologies are improving and are significantly changing. So unless there is some kind of a projection on what governments intend to do, if they project that this is the kind of auctions they intend to do, then the private sector will be prepared in terms of preparing the capacities to implement. The third would be that while subsidies will be important, but then it will have to be properly targeted. And fourth is that by itself, the civil society or the corporates will not come forward to do certain important things. So I think it is very important to have proper disclosures. So we will have to see that the large corporates, the mid corporates and the SMEs, they need to come out with proper disclosures. Disclosures regarding what is the carbon they are emitting, what is the kind of water they are using, what is the kind of plastic they are using. And for these disclosures to work, there will have to be a proper taxonomy, so that the definitions are known to everyone. Now once these disclosures are made, then it will be important that we slowly start implementing policies for the reduction of carbon emissions, for the reduction of water wastage or the plastic wastage. I think all these steps will be extremely important. And once these things fall in place, then there will be a role for financial institutions to come forward. It will be important to remember that when private sector comes forward, then it can only work when the projects are viable and it can make money. And today, fortunately, technology has progressed, the policies have progressed, and a lot of startups have come out with the business, models where actually quite a number of projects are viable, and this is one sector where the private sector financiers can play an important role. So those are my views.
Thank you for those views. I think we have some time. If there are some questions from the audience and with the permission of the panelists, we could take a few questions. Yes, please. You could kindly introduce yourself and you can mention that which of the panelists you could request a question.
It's to all.
To all right.
I'm Praveen Agrawal. I'm the World Food Program representative here in Egypt.
Microphone, please.
We have a partnership with Afro-Exim Bank, and one of the things which I've heard is a lot of work is being done, and a lot of effort is being expended, and there's some very good models that are out there. How do we take it to scale? Because what we have is an opportunity to replicate. We'll have the opportunity to have sustainability if the people for whom it is directed.
I thought I had a loud voice anyway. If they accept it, then the sustainability will be there. And the biggest area are the vulnerable communities, right? So it's not just the mega projects. It's how do we take it and become a household name? And then it's where we start making the difference and we start getting that scalability. So I'm a little bit interested to hear what options are there to bring the private sector, because these are huge clients for the future. So how do we get to that financial inclusivity and inclusion? I know the government of Egypt is working very heavily in terms of financial inclusion and looking for products. We're looking with the Afro-Exim Bank and building that. And of course, South-South was mentioned several times. The World Food Program with Afro-Exim Bank has established a South-South Knowledge Sharing Center in Luxor. And it could be a very good place for us, at least, to start looking at how do we bring things together. And being India, I have a vested interest, I guess.
Yes, please. Who would like to take that first?
So, thank you. I think maybe, do you want me to go?
Yes, please.
Thank you. So, I think it's where you started from, our initiative, our intervention, the knowledge center, the capacity building center, the center offering technical assistance to smallholder farmers, to small businesses. I think in scaling this up across the member countries, replicating what we did together in Luxor, in Malawi, in Zambia, in Ghana, and coming together, not just World Food Program and Afro-Exim Bank. I've always said we cannot solve this alone. We need partnership. We need World Food Program, we need Afro-Exim Bank, AFDB, we need TDB, we need everyone, India Exim coming to the table. We need the private sector, but we have to sort of lead the way. I think as DFIs, MDBs, whatever you call us, there's a lot of responsibility on us. We seem to be better at galvanizing private sector. So where we lead the way, private sector tend to follow. So I think it's in bringing on more partners to what we are doing in Luxor and replicating it across the continent, we will be able to support private sector. Because they said, my fellow panelists says one thing, that private sector tend to go where they think there's something bankable. And when they see us there, they know definitely we are making it bankable, and then it's easy for them to come on and support us and scale up on a wide scale, on a wide basis. So that's my...
I'd just like to add something.
Sure.
See, when we talk about scale, sir, I think that integration is very important. By integration, what I mean is that you have to see each segment of the market which is going to play an important role. If you talk about renewable energy, it's important that you have a manufacturing in place, at scale. At the same time, you should have financing at place. At the same time, you need to have proper contracts in place. I think all these things will have to move in sync. Unless they move in sync, scale will never come. So I would think that fortunately technology is in place. Today, we need power purchase agreements which are enforceable and where payments are made in time. So we need to strengthen the public institutions who are the off-taker of this power. At the same time, we can't be dependent upon few geographies for manufacturing. So manufacturing needs to be more democratized and technologies need to be available. That's extremely important. Third is that we are talking about trillions of dollars. So naturally, the few countries, developing countries, may not have that kind of capital. So I think capital flows will be very important. And when we talk about capital flows, it is not just the cost of capital. All the revenues are generated in the local currency, while when the capital comes from overseas, it comes in foreign currency. So we need to see how we can hedge the risk of the currency depreciation. I think that's an equally important factor. Finally, we need to create incentive for people to reduce their carbon emissions. So I think we need to work on the disclosures. So I think unless integration happens about all these factors, probably scale will not come.
And any thoughts from TDP?
Like the others have mentioned, I think partnership is key. And I would also want to say that each entity has a role to play in their own specialization. But at the government level, because as you mentioned, talking about the SMEs, because the portfolio you're talking about is on the SME level, I think the government also has a lot to play in terms of a neighboring environment for those SMEs to survive. So at the private sector level, on the banks, I think like my colleague has mentioned, partnership is very key for us to play a key role and also work together to be able to support these SMEs. But also, like they've mentioned, the financing, the finance we provide, again, like they mentioned, concession of funding is very key, capacity building is very key, as well as technical assistance to give them the neighboring environment to survive.
Okay, thank you. Any other questions? You have one? Go ahead. Can we have the mic for the lady, please?
Hello, I'm Krishna Gangopadhyay from Afrinex, and this question is to all panelists, but particularly to TDB and Afri-Exim Bank. I was very heartened to see what you just mentioned about the fact that the capital market does need a lot of deepening when it comes to the bonds and financing, sustainable financing. So just to talk about ourselves, we are a stock exchange. In fact, Exim Bank of India was, we started our AFEX Green platform with Exim Bank of India Sustainable Bond Listing, and is a Pan-African exchange supported by Government of India and Government of Mauritius. And we are actually the best example of private public partnership that you could look at on the capital market space in Africa. So having said that, when you talk about capital market deepening, what sort of support or what sort of expectations do you have from stock exchanges to facilitate such capital market deepening, especially for sustainable financing?
Go ahead.
You want to go first? Okay, let me let you go first.
Thank you. From TDB's perspective, as Arya mentioned, the first shares we issued were ordinary shares. But the second phase we're going to do is listing. But in between, we've also come up with another instrument of hybrid, because we've been looking at the challenging markets, the interest rates going up, and all these conflicts taking place. We realized for us to list would be a challenge. So we've just recently worked with the MDB Challenge Fund to do a study on the listing, so that we can get an informed decision, because most of the entities that have listed, they're having challenges, and I think she can also mention that they are struggling in terms of the capital market. So we've taken a different route to do a study to find out what are the challenges at the moment on the capital market, where should we go. So I think our route, it will definitely be a totally different instrument. But in future, we intend to list. But at the moment, we are taking both ordinary shares as well as a hybrid instrument.
So taking it away from us as institutions now, looking at the market itself. So what have we seen? A lot of times we've had feedback like, we've not been able to attract financing, private sector financing into the continent because our domestic capital markets are not deep enough. And as DFI, some of the things or challenges that have been posed to us is how do we make these markets work? So some of the instruments that we've come up with within our portfolio has been guarantees and insurance products to be able to support, market issuance, to be able to ensure that once these are, backed or are backing local currency bond issuance, they can be able to attract liquidity into this market. So these are some of the things we are doing, and we are working across institutions to be able to do it. And we welcome collaboration with you also. Whatever you've been able to do in India, however you've been able to replicate and strengthen and deepen the Indian capital markets in terms of issuance of green bonds to attract FDIs, we would be willing to work with you on that. But there's another initiative that we've been looking at that has a spin on capital market, and this is talking about carbon credits and carbon markets. And as you know, all through this week, we've had that Africa just contributes between 2 to 3% to carbon emissions on the continent, in the world. It means that Africa itself is like a major, I don't know, it contributes to relieving the greenhouse gas effects. And you have enormous forests in Africa that act as carbon sinks that help us, revitalize the environment. We've had a lot of inquiries from member countries. How do I generate these carbon credits? How do I trade these carbon credits? How do I then use these carbon credits to be able to implement projects? You've had that from DRC, we've had that from Gabon, we've had that from countries where, you have enormous of these, forest resources. So, and that is a way to incentivize them to be able to keep these resources and to be able to continue to support the environment. But one thing we've not gotten clear is developing the carbon markets on the continent. We are working on an initiative with ECA to develop the carbon markets in Africa to ensure that, whatever carbons we are generating can be tradable by these member countries and can be used to finance, projects. And, this is something we are working on. I don't know what your perspective is in India, but I think we are open to getting more information from you to support us in putting all this together. Thank you. Fantastic. So let's connect after this.
As far as the stock exchange is concerned, I think there are three things which are extremely important. One is clearly the disclosure, which is also, work of the capital market regulator. Other is the taxonomy. One has to avoid greenwashing. Otherwise, this whole thing can go out of whack within no time. And third, madam, as you rightly pointed out, carbon trading, which again is the remit of the government. But once we find the way of trading carbon, then I guess, a lot of innovative funding will evolve, where the actors who can mitigate carbon emission at a low cost can generate some carbon credits, and then it can be sold to those actors who are not able to mitigate carbon emissions. I think these three would be a very important role to play.
Thank you. I think, it can't be better than this closing remarks. I would like to thank the panelists, also the participants who are sitting here and joined us virtually for this valuable insights. Thank you, panelists, once again. And of course, the discussions will continue. We've got a lot of food for thought, and definitely the collaborations between the DFIs and the public sector in this space of climate change and green energy would take us a long way. Thank you again.
Thank you. On behalf of the India Exim Bank, I would like to express our sincere gratitude for your valuable contribution to our discussion today. Your insights and expertise have been truly enlightening and will go a long way in helping us to achieve our goals. We would now like to present to you the Sankalp Taru certificates, which represent our appreciation for your time and effort. These certificates are being delivered to you virtually, and we hope that you will cherish them as a symbol of your contribution to this event. As we come towards the end of the program, I request Mr. Prahlada Nayyar, Chief General Manager, India Exim Bank, to propose a vote of thanks.
Good afternoon, everybody. Mr. Solomon Koinor from the FDB and Ms. Aparna Bhatia, they are not in the conference hall, but however, I would like to express my sincere gratitude for them to spare their time here to and also address all of you on this very important subject. Our ED, Executive Director representing India at the African Development Bank, Ms. Mette Knudsen is here. Thank you, Madam, for your support and also helping us in establishing all the logistics that are required in organizing this event. Thank you very much. In their keynote speech, both the Kainor and Ms. Bhatia, they have highlighted the strong Africa and India partnership and the potential that exists in the area, especially in the sustainable development going ahead. All speakers in the panel, they have highlighted which are very topical interest, and they have shared very quite valuable inputs towards reducing and also mitigating climate change. There is huge shortfall in public funding, everybody knows, that need to be addressed in order to mitigate the climate crisis. We were enlightened to learn on this Ms. Knudsen from the FDB group, Ms. Gupta from the International Solar Alliance, all of whom dwelled on the theme on the today's event, mobilizing private sector financing for climate and green growth, while sharing their interesting insights on it. The panel discussion today was extremely interesting. Mr. Chaurasia, Ms. Dorothy, Ms. Kamari, Mr. Singh, and Mr. Salah. All of you have shared your practical experiences also with climate and green growth, climate change and green growth, both at the international level and also at the institutional level. In a developing South-South framework, I believe that today's topic, mobilizing private sector financing for climate and green growth, and sharing of India's experiences and with Africa, and sharing of African experiences with India, holds significant importance. I am sure the audience would have found the discussions thought-provoking. I thank all the distinguished speakers, panelists for taking time out, and some of them have traveled all the way from India to share their valuable insights. Finally, we would also like to thank the members of the African Development Bank Group for their unstinted support and guidance in successful organization of the event. Thank you all. We request all of you to join us for lunch. There is a traditional Indian lunch at the Summit restaurant. My colleagues will guide you. It is about 200 meters away from this, but within this complex, we will guide you through, and I request all of you to join us for the lunch. Thank you very much.